Welcome, dear traders. You are watching a recap of the Asian session on May 2. Yesterday, regulators seized First Republic Bank and sold its assets to JP Morgan Chase & Co. The main US stock indexes closed lower. Japanese stocks showed a weak dynamic after hitting new highs on a Monday. In Japan, trading volumes were low ahead of the long holiday. Australian and New Zealand equities moved down as the sentiment on Wall Street turned sour. Today, two events are in the spotlight. The first one is the woes of a First Republic Bank. The earnings report revealed that its deposits plunged by more than $100 billion in the first quarter. As a result, its shares plummeted by 90% since the start of the year. The US authorities had to take action again to make sure that the banking system is safe and sound. The bankruptcy of the company signals a recession. Bank runs are also a severe blow to the monetary system. The Fed remains committed to a hawkish stance. This is why it should prevent potential bank runs in the future. So the takeover of First Republic Bank by JP Morgan is likely to be just a respite in a crisis. Meanwhile, the Fed meeting will begin today. According to the FEDWATCH tool, almost 95% of traders are expecting a 25 basis point rate hike. Therefore, the main drivers for stocks and currencies will be the comments of the Fed policymakers on future plans for monetary policy. Trading is likely to be sluggish until the announcement of the rate decision tomorrow. On the chart, we can see also moderate volatility of the US dollar. It's now trying to maintain its three-day rally. Its rise occurred amid expectations of a rate increase and an unexpected jump in the Manufacturing PMI Index. However, some economic indicators have been weak for a long time. Disinflation and the May events in the banking sector may undermine the upward movement of the US currency, and they could also affect its status as the main reserve currency. In the Asian session, it was trading at 102 versus its main rivals. It was hovering in the downward range of 101.90 and 102.20. The greenback may recover only amid hawkish comments of the Fed officials and further rate hikes. The Australian dollar jumped to new highs in the morning amid an unexpected rate hike by the Reserve Bank of Australia, and by the end of the Asian session, its price had already risen to 0.6772. The AUD-USD pair was moving in the green corridor of 0.6621 and 0.6718. The Reserve Bank of Australia's surprise move raised the interest rate by 25 basis points, so post is a tightening taken in April was temporary indeed. The central bank needed to assess the state of the economy. However, inflation in Australia is very still high, so new rate hikes are necessary. The headline Consumer Price Index came in at an annual rate of 7%, and it's quite far from the 2% target. Some further tightening of monetary policy may be required to ensure that inflation returns to target in a reasonable time frame, but that will depend upon how the economy and inflation evolve, the Reserve Bank of Australia said in a statement. The movements of the yen looked less buoyant today given the sharp rise of the Aussie. Its trajectory mainly depends on the US dollar and the US Treasury notes. Both assets are now stuck at the current levels ahead of crucial events, so the yen climbed higher. The dollar-yen pair reached the resistance level of 137.8, which was also a two-month high. However, after that, the bullish momentum eased and the yen touched 137.50. Despite a small recovery of the yen at the end of the Asian session and slide into the bearish channel of 137.30 and 137.80, the bulls remained in control. The New Zealand dollar also advanced today to 0.62. It approached the two-week highs versus the US dollar amid expectations of another rate hike. In its financial stability report published today, the Reserve Bank of New Zealand pointed out that their financial system remains robust despite global economic challenges. On the early Tuesday, the Kiwi dollar pair was moving in the upward range over 0.6163 and 0.6207. And that's all for now. Subscribe to the channel and stay up to date with the latest market news. See you soon.